SoFi Technologies is currently trading at about $15.62, and I'm going to show a valuation for 2029, my price targets. I'm going to show two cases, one with reasonable assumptions and the other one with great execution. And before I continue further, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. In full disclosure, I do own about 500 shares of SoFi at about $6.5 average, and I also currently own 12 calls for $15 strike price for January 2026 expiry, which I'm up about 450%. So let's get to the base case, or the case with reasonable assumptions. As you can see on the screen, for 2024, they made close to $2.6 billion of revenue. And out of that, 1.5 billion is coming from lending, 700 million is from financial services, and about 400 million from technology. And SoFi is guiding for close to 30% year-over-year growth for the next few years. But in my opinion, as the company gets bigger and bigger, it's hard for them to grow. So I'm estimating 25% growth for the next 5 years, which would put them at $7.8 billion of revenue by 2029. That's almost more than triple the current revenue. And SoFi said that they want to move away from lending and as a percentage of revenue, and they want to get more revenue from their financial services and technology, because those are the businesses that command higher multiple. As you all know, lending comes under banking, and it's quite risky because SoFi deals with loans that do not have any collateral, and therefore they do not get more than 10 multiple. Even if I consider their growth, I can only pay like 13 or 15 multiple, but not high multiple like 20, 25, which tech companies command. So SoFi long term is to have 1/3 of the revenue from lending, 1/3 from financial services, and 1/3 from technology. So that's what I'm going to model in this valuation. If you think that's not a good mix, you could do your own valuation out of the $7.8 billion of revenue by 2029. So I put $2.6 billion for lending revenue, $2.6 billion for financial services, and $2.6 billion for technology. With the current pace of growth of financial services, I think they can comfortably get to $2.6 billion. And for technology to get there, they need to win a large contract from a huge bank. Otherwise, it's a bit difficult. But in any case, financial services and technology will have to be 2/3 of their revenue, or more than 2/3 of their revenue. That's their target. So I'm assuming net profit margin of 25% for lending, 25% for financial services, based on the gross margins. But for technology, I'm only assuming 15%, because currently their contribution margin is 30%. So if your contribution margin is 30%, I think 15% would be a fair net profit margin. And this is not a technology that is very technologically advanced that banks would pay a higher premium. We're looking at the likes of Market, etc., which are having gross margins in the order of 40-45%, right? So this is not like AWS where you will get 80% gross margin. And this is again my opinion. This is simply a banking software, Technisys and Galileo, right? So if you disagree with me, you can of course assume your own net profit margin, but my assumption is 15% net profit margin. So based on this, I'm getting close to $650 million of net income for lending. Again, $650 million for financial services, and close to $400 million for technology. So overall, the net profit would be $1.7 billion by 2029. And the multiple for banking, otherwise lending, usually is 10, but since SoFi is growing, I can assign a multiple of 13. You can watch my video on Bank of America on why banks get low multiple, and that's for your knowledge. And for financial services, since they're growing fast and have higher net profit margin, I'm assigning a multiple of 30. I don't think I can do much more than 30 because there is heavy competition in this sector, and majority of the companies have no moat because anybody can switch from one platform to another platform. This is not too sticky. So 30 multiple for financial services, and for the technology platform, usually it gets much higher multiple than 30. But since the margin is low, I'm estimating only 25 multiple. So with that, the market cap for lending would be $8 billion, financial services would be $20 billion, and technology platform would be $10 billion, making it a total of $38 billion of market cap for SoFi in 2029. And currently they have 1.09 billion outstanding shares. They're continuing to dilute the shareholders, but with the profits that they make in future, I'm estimating that they would buy back their shares. Also note that SoFi have some convertible notes, right? So I am not considering any dilution, even though a dilution can happen because of the convertible notes, and also in future they may dilute for various reasons. But I'm estimating no dilution, with which they'll still have 1.09 billion outstanding shares by 2029. When I divide the $38 billion of market cap with 1.09 billion outstanding shares, I get a stock price of $35. Currently they are close to 15.5, right? So that's about 122% gain in 5 years, which is very attractive. Now let me show you the great execution case, which I don't believe in, but I would be happy if it happens because I am the owner of this stock. So I'm estimating 30% growth rate for the next 5 years on an average, which is hard to do, but it's not impossible if they do execution very well. And SoFi has been executing very well since the past few years, but past performance is not an indicator of future performance, right? So with 30% growth year over year for the next 5 years, they can make close to $9.6 billion of total revenue. And again, I'm estimating 1/3 will come from lending, 1/3 will come from fintech, and 1/3 will come from technology. I'm keeping the same multiples, 13, 30, and 25 for lending, financial services, and technology respectively. So overall, the market cap would be $46 billion by 2029. I'm still keeping the same number of outstanding shares, 1.09 billion. With that, the stock price in 2029 would be $43 for SoFi, which represents about 173% gain, which is phenomenal. Overall, I continue to hold SoFi because of its execution. Long term, I think they will do well on lending and financial services. I do not have much hope on technology platform. Even if they gain a big contract, I don't think it would be valued very well because of its contribution margins. But I'm counting on the base case where SoFi can achieve $35 stock price by 2029. I'll continue to hold my shares. Let me know your thoughts in the comments. Thanks so much for watching.